Hello friends, welcome to my channel and thanks for watching this video. Friends, in this video we are talking about the long-term trend of Centrica PLC. So if you look at the short-term pattern, so there is a sharp jump of around 66 odd percent from the lower level, but just look at the long-term trend. So it has been going lower since 2013 odd levels, and if you see the current price, which is lower or at the level of 1997 lows, so the stock is pretty much went back 20 years. And if the current price does not sustain on the upper side, then you will see a further downside. So what I'm trying to say here is, whatever you can see right now, the bounce back and all that stuff is simply a bounce back unless there is a sustained fact to that and it has been backed by fundamentals. Because the thing is, the stock has beaten down quite sharply and now it is going up, so it is merely a bounce back unless it proves so. Okay, so there are certain levels which it needs to cross, beyond which we can say no, it can go back to its previous highs, and the bounce back is very serious, and we should consider this as a rebound rather than simply a bounce back. So for that it needs to cross certain level. And let me tell you one thing, that to call a new trend, if you want to call a new trend in this stock, so it has to be go beyond this level. So unless it crosses 408, you cannot say that there is a new rally which is starting in this particular strip. Beyond that, beyond 408 levels, there is a new rally, but till then you can see whatever is happening in the chart is merely a rebound. And in this kind of chart pattern, you should be very much aware and cautious about the trend, because bear market rallies, you can consider, if you look at the fall, this is simply a bear market rally because the chart has been falling from last 7 years. So if you just look at this trend, okay, so this is nothing but a bear market rally. Okay, so and these rallies are very sharp. Bear market rallies are generally very sharp. It can go up to 100, 200, 500 odd percent, but the question is on sustainability. So you should be very much aware about the risk which you are taking right now. And unless there is a fundamental change, there is a policy change which is there in the script, you cannot say that the stock is going to go back to towards its heydays. So if you look at the current support and resistance of this chart, so the current resistance, because it is nearly at that level, is at around 50, and below that the support, the two major support will come at around these two levels. Okay, so below 50, 35 and 28. Okay, so if it reaches and stays above 50, so the next resistance of the target will come at around 64, then 78, then 96, then 126, then 162 and 214, and here 360, and finally 408. So let's understand one thing, until and unless it went up and stay above 214, we cannot say that this rally is serious. So it has to go above 214. Okay, So it's a 2018 level, so it has to go above that level and stay above that, then we can say that the rally has very serious. Unless these kind of bounce back are very sharp, but we don't know because there are multiple resistances. You can see here 1 2 3 4, each and every levels are target as well as their resistances. So if it won't hold to those resistance level, it will again fall back, and it will fall back very sharply. So this is the kind of nature of the bear market trend. It feels like things are going to go back, and it's going to be over for bad times and good times are about to come. But that's not the actual truth, because if the chart has broken down this much, so you can expect that these rallies are pretty much bear market rallies. And if you want to stay in this kind of script, apart from or being known that the trend has been broken down, so you should respect and very disciplined about your risk management, and you should or you must respect the support levels, and you must know or you should know that what should be the risk if I want to take in this position, and how much risk I want to actually carry. So if you don't want to carry, and if you are very much risk averse, so better you go with the strong strip where the trend is strong. Or if you want to stay in this kind of strip, you should know your support levels, or you should know your risk management. Because anyhow, if you able to manage your risk, you can, the next thing which is there is only the profit. So in this kind of strip, the rallies are very sharp. You should be aware about what you are doing. You should be aware of the trends, and you should be aware about the resistance and the support level. So this is the end of the video. If you like this video, do like and share your thoughts in the comment section, and subscribe my channel for this kind of contents. Lastly, take care of your family and friends.